Today on Forbes, hedge fund billionaire Chris Hohn's TCI profited by a record $18.9 billion in 2025. Most of the world's best hedge funds have advanced quantitative models and deep investing teams across several asset classes. But in another standout year for old-fashioned stock investing, none fared better than British billionaire Chris Hohn. Chris Hohn's London-based TCI fund management, with $77 billion in assets, recorded an estimated $18.9 billion in net gains last year. This was the largest single-year gain ever for a hedge fund, per Edmund de Rothschild's report. Driven by the strong stock market, the fund has gained $40 billion in the last 3 years, with a reported 27% net return last year. Forbes now estimates Hohn's personal fortune at $11.8 billion, up from $9.2 billion a year prior. TCI has a concentrated portfolio of just 9 U.S. listed equities, totaling $52.7 billion, including GE Aerospace, Microsoft, Visa, Moody's, and S&P Global. GE Aerospace, General Electric's main offshoot after its 2022 spin-offs, was TCI's largest holding at $14.2 billion by late September, with its stock gaining 85% in 2025. TCI also invests in European aerospace stocks Airbus and Safran, which both rose over 40% last year. As of March 31, 2025, the firm's latest annual report showed an $82 million dividend to Hohn's parent company and $797 million in charitable donations. This included $637 million to the Children's Investment Fund Foundation, the namesake charity founded and chaired by Hohn, which supports climate causes, children's health, and reproductive rights. With $68.4 billion in net gains since its 2004 inception, TCI reached 5th on this year's Edmund de Rothschild rankings. This annual list is produced by Rick Sofer, a senior advisor at Edmund de Rothschild and former chairman of LCH Investments, which is the world's oldest fund of hedge funds and an Edmund de Rothschild subsidiary. Sofer's research revealed that the top 20 managers collectively made $115.8 billion in gains last year, contributing to the hedge fund industry's record $543 billion total. Sofer attributed this strong performance to, quote, a combination of record-high assets under management, strong equity and bond markets, and sizable macro trading opportunities. Ken Griffin's Citadel is the most profitable hedge fund ever, hitting $90.4 billion in total gains with a $7.4 billion gain last year. The flagship Wellington Fund's 10.2% net return in 2023 was its worst since 2018, trailing the HFRI Fund Weighted Composite Index's average hedge fund net return of 12.6% and the S&P 500's 17.9%. Despite this, Citadel boasts a 19.2% annualized net return since 1990, crushing the S&P 500 by over 8 percentage points. D.E. Shaw and Bridgewater were 2025's biggest winners after TCI and are second and third, respectively, on the all-time list. Bridgewater's flagship Pure Alpha Fund returned 34% in 2025, netting an estimated $15.6 billion in gains. Led by CEO Nir Bar-Dia and co-CEOs Bob Prince, Greg Jensen, and Karen Karanal-Tambor, the firm is now without retired founder Ray Dalio. D.E. Shaw earned an estimated $12.7 billion, with its multi-strategy composite fund returning 18.5%, and the macro-focused Oculus Fund posting 28.2%. Collectively, the top 20 firms have generated $970 billion in gains since inception, making it a hard list for up-and-coming firms to crack without a lengthy track record. The same 20 hedge funds on the list last year made this year's list, with none moving up or down more than 2 spots. All 20 were founded before 2005, and TCI is the only one in the top 15 with an inception date after 2000. Despite lagging the bull market, the hedge fund industry remains popular. Global hedge funds saw an 11-year high in inflows, attracting $71 billion in the first 3 quarters of 2025, boosting assets under management to $4.98 trillion. This growth, comes as other alternatives like private equity struggle. With high stock valuations, hedge funds' value will now be measured by the protection they offer in a downturn. For full coverage, check out Hank Tucker's piece on Forbes.com. This is John Palmer from Forbes. Thanks for tuning in.